trading week at the New York Stock Exchange. The Dow finished today about, wow, it's bouncing all over the place. We'll call it even after some swings during the day. The S&P 500 was also flat, but the Nasdaq posted gains after yesterday's sell-off. Mike Pugliese joins me now. He is an economist at Wells Fargo. I know I just butchered your name. Please correct me.
Pugliese.
Thank you so much. So, it looks like it's standing, the Dow, about 21 points below what it started at. The January jobs reports was wildly higher than many expected. And what does this mean? What does this say about the true impact of that Omicron variant that so many people were so scared of?
Yeah, so the employment data and really the economic data more broadly have been very volatile over the course of the pandemic, and that's made it harder for economists like me to forecast it. But going into this January print, we were particularly unsure what the impact on employment would be from that Omicron variant, just given how high COVID cases were. So the survey week for the employment report was right around mid-January, and that's when COVID cases were peaking at almost 1 million new cases a day. And so the question became, what would layoffs look like on the other side of the seasonal hiring around the holidays? Would employers be able to hire workers given all the challenges we had with face-to-face contact over the course of January? And I think what we found is that employers and prospective employees managed to get through that, and we got quite the beat on employment relative to expectations, with almost 500,000 new jobs added in January and very positive upward revisions in December and November, despite those headwinds.
So, Mr. Pugliese, is this latest report a fluke, or will this be a trend moving forward?
Yeah, are we going to see 500,000 new jobs a month for the remainder of 2022 like we did in 2021? Probably not. Labor demand is still really high, but the economy is normalizing. The labor market is normalizing. At this point, we're only a couple million jobs below where we were in February 2020. We've come almost all the way back from that 22 million job hole in which the economy found itself in early parts of the pandemic. So I don't think we're going to see 500,000 jobs a month from here on out the remainder of the year. But I do think labor market gains are going to be above that, what I would consider normal trend of 150 to 200,000 for the foreseeable future. Labor demand remains quite strong. We're slowly starting to see signs of labor supply unlocking. And that labor supply side has really been what's been the main speed limit on hiring. And the January data was encouraging in terms of more people looking for work. So I think, I'd take the under on 500,000 jobs a month over the next few months, but I do still expect strong employment gains.
Oh, wow. You're an optimist here. You paint a really pretty picture, but so many people are still looking at those inflation numbers and they're wondering how far out will we be dealing with these rising prices?
Mm-hmm. Yeah, I think the big question there really is when I think about the inflation outlook, the big challenge on that front has been COVID. When I think about forecasters like myself or like the Federal Reserve a year ago, I think the biggest surprise to them has been how long COVID cases have stuck around at these levels. And then by extension, how long that's prevented the economy from fully normalizing, where spending in certain areas of the economy, particularly goods and durable goods like cars and appliances, furniture, that remains quite high as people can't participate in some of the face-to-face service parts of the economy. Think movie theaters, public transportation, live entertainment like concerts and sports, spending in those parts of the economy that are very depressed. And the concern from the Federal Reserve, of course, is with the Omicron variant, what if it takes even longer for spending in those categories to normalize? And so it's our expectation that it won't just be employment that's high over the next few months, but the inflation side is probably going to be pretty high over the next couple quarters as well, too.
And it sounds like you're saying it's all dependent on what variant is out there, how long we will be living with COVID, and a lot of other things that may be unforeseen.
Yeah, I think that's exactly right. And that's the bind for the Federal Reserve right now is, to some extent, they can get their arms around this. And they're seeing an employment that's giving them, employment reports that are giving them the green light to tighten policy and try to make some headway in terms of bringing inflation down. But to some extent, there's only so much they can do, given that part of the problem on inflation is supply chain, supply chain issues and consumer preferences that have shifted during the pandemic, obviously the ongoing problems with COVID. And, in part, there's only so much the Federal Reserve can do to rein that in.
Yeah. Basic supply and demand. Mike Pugliese, great name, by the way. Thank you for joining us.
Thank you, and thanks for having me, Michelle.